Welcome to Prepare to Profit for the week of June 5th, 2023. I'm Dan Fleming. I'm also the host of the online video course, The Complete 3-Day Stock Trader, and you can check that out at marketroom.com. As I mentioned last week, we could get a break to the upside once the debt ceiling deal was resolved, and on Friday, the U.S. Senate did pass the debt limit deal, and we made a new high on the S&P 500 for the year. We saw conflicting numbers come out in the labor markets, with payrolls in May making a huge jump. But the unemployment rate also came in higher, which is kind of odd to have both going up at the same time. More on that in a bit. The Fed rate decision is coming up on June 14th. Economically speaking, payrolls in the public and private sector increased by 339,000 in May. That's much higher than the 190,000 estimate. That is the 29th straight month of positive job growth. Here is where things get kind of odd, because at the same time, May's unemployment rate also ticked higher to 3.7%. On one hand, you've got more jobs created, while on the other, you've got more unemployed people, making things a bit more confusing for the Fed's upcoming rate decision on the 14th. Initial jobless claims came in at 232,000, up from 230,000 the week before, but far less than the 235,000 expected. Manufacturing activity in the U.S. did shrink in May, with a decline in new orders. The ISM manufacturing PMI was just under the expected 47 at 46.9, still signaling contraction below 50. Now we need to watch next week's factory order numbers that will let us know the direction we're moving in there. Let's take a look at our S&P 500. Last week I said watch for a breakout on the debt ceiling deal, and that's exactly what we got. Now the strength of the move put us above our upper Bollinger Band, so expect to settle back within its range this week with not much on the economic calendar. I would say that the breakout will hold, but don't see too much upside being this extended right now. Technically speaking, I still want to watch the Russell 2000 Small Cap Index, or the IWM. That can give us clues as to the overall health of the market and confirm the strength. It's like looking under the hood of the market. We can see that it finally broke out of its range and is now above the 200-day moving average. And as long as it stays above it, that's a bullish sign, and a new uptrend in the markets will be underway. That said, the strength of Friday's move did extend it above the upper Bollinger Band, so I'm expecting a pullback into the range, but want to see it still hold that 200-day moving average. The takeaway, Friday's big move might have the overall markets extended just a bit, so expect a mild pullback before resuming this overall uptrend. With astronomically strong non-farm payroll numbers, and even with a slight increase in the unemployment rate, I don't think it's enough to put another rate hike on hold just yet. So I do see a rate hike coming. If not this month, then July is all but a sure thing. Overall, the markets are looking strong, and now is not the time to be sitting on the sidelines. If you're looking for your edge in the stock markets, check out the Complete 3-Day Stock Trader online video course at marketroom.com.